Hey guys, I got a couple hours here before we end up leaving to the game, so I figured I would just get this over with and just jump it ahead of the train because today was a weird day. It really started with me taking this short here, and I'll just review it really quickly. I think a lot of you guys know why I went short, which was the daily candle here, right? So if we go to the weekly chart, this will give you guys a clearer view. We had this weekly high, which we should always look at our like swing highs and our swing lows. And this was the most recent lower high on the weekly, or our swing high, and a very, very key level, right? Remember, I talk about too that anything like on these like extreme swing high, swing lows, that's kind of like your external liquidity, and anything that trades in between, that's your internal. Typically, the market will try to trade to these levels, right? That's kind of the goal. It tries to trade to these spots, and usually it'll once it hits that, and that's kind of what your objective is. It'll trade back down into the inside liquidity, their inner liquidity, and then kind of figure it out, whatever it wants to do, and it can trade back up to that point and then break out further, right? Or it can trade to the lower end of the external range and then maybe sweep that, come back. There's a lot that can happen, but you really want to map these out. And this was a huge, huge important spot. And then yesterday, right, we had this crazy, crazy candle. You guys can see it here. Remember, this is the weekly spot, but we had this daily candle here. Now, you can't tell me if we get rid of this day here that this does not look like a short, right? If we just look at the right side. And really, we kind of knew that the dark pool print that had printed the previous morning was at 465. So I was waiting, as you guys know, as the market was getting ready to close, I wanted to see this candle push back up. So I wanted the buyers to be able to soak it back up to maybe to the middle point of the day, so like 470, 475, something like that. And that's not what happened. I mean, it kind of closed, as you guys can see, like right here, 470, 469-ish. And I was expecting this to gap down, right, and then continue to sell down towards this weekly spot, which was 462.25 to like 450, which is this daily support level. And then I was going to be out of that trade. I was expecting a gap down, especially looking at the volume here as well. You guys can see the uptick in volume. Obviously, a really, really heavy day in just the broader market after PAL started. This was a classic fake sweep, right? And then just a big, I think it was just a big bear trap. Maybe not long term, but at least for today, right? I mean, it was very apparent off the open that the strength in SPY was there. That'll lead to the second recap trade, which was SPX. But yeah, I mean, like, there's no denying that this was just a trap. And once I woke up this morning, if you guys didn't know, I woke up a little bit late, but right, I ended up getting into the trade up here, or actually like right around here, somewhere in this range, and then it sold off. And if you guys knew, I know I think I got like a 237 fill. These ended up going to about 29. I had trims set at 3.0, and I never got filled, which sucked because this would have taken me out like 3/4 of the position, and I would have had runners. But unfortunately, it ended up pushing back up. Right, we kind of closed right around here, and then we gapped up to the open right here. Okay, so that was, a 5 point move. Contracts, I think, were already like, you know, I think I bought them at 237, like I said. They sold off a little bit, and I think they came to the 50s or the 40s. Either way, it was a pretty big loss. And then it didn't help the fact that I slept in for the first 30. So I mean, this is a 15-minute chart, so price was already above that key level again, 476, which is that weekly level, right? And then obviously it flagged, pulled down into the 618 or just the opening print low, and then rallied from there and just had an absolute squeeze out along with the rest of the market. So that was tough because I started the day down essentially what, 700, $800. I was in that range. I think it was actually six. It was six or 700. And because I had four contracts valued at like 237. Yeah. So I mean that was awful. And then we can just jump into the next trade. We can look at Tesla. Let's go ahead and transition to that. All right, Tesla is interesting because if you guys don't, I mean, you guys should all know, a lot of us are in this. I started the swing here on the re-roll of the 300 calls for January. And I mean, really, we were just looking for this to get as close to 206 as possible and see some kind of recovery or some kind of sign of accumulation or just like some kind of rounding bottom, a flat bottom, whatever it was, where selling pressure had eased quite a bit. This is exactly what we got towards the end of the day yesterday, and this is where I started the position. And then this morning, right? I expected us, honestly, I put it on Twitter too, for us to get a nice rally up to like 212, 216. Actually, I was looking for 217 and a half potentially. But we ended up pushing up, hitting the weekly level of 212.36. You guys should know how I got this level. It's pretty simple. 212 was the swing low here initially. If you zoom back a little bit, I don't know if it will let me. No, it's not going to. But this is the upper region of this, the 216.28. Very, very big, I said big level on the weekly chart, but also ties into this gap fill here as well. This level has been somewhat respected in terms of wicks and just candle closes trying to get over. So this has been like my weekly sort of demand or supply, just interchangeably depending on whether we're above or below. So if we got through 212, I was looking for 216 to 217. And yeah, I mean, that was pretty much it in terms of how my chart was structured. Now, if we take a look here this morning, we saw the rejection off of 212, and then it started to sell off, right? And I made a mistake, and this I talked about this too. This is like very, very hard to do at times because you have a loss that's a swing. You don't have much control over that. You see red on your account, and instantly you're trying to look for trades, whether it's planned or unplanned. You try to find something quick, and I made the comparison of just taking bull flags and just a random spot on the chart just because you see a bull flag. If you don't have a level, don't trade it. This was one of those times. We were in between two big levels here. I already had my ads into the swings, and I don't know why I necessarily took a more aggressive approach on an intraday play. I should have just let this sell back down to 206, look to see if there was ads here again, or if it held yesterday's low, probably add that. Instead, you guessed it. I mean, I tried to get something a little bit more aggressive, and I ended up taking what I thought was going to be a 618 bounce. It did, obviously push up off this, started to come down, and we got an initial bounce here. Of course, it doesn't look like that now, but we got this wick where the candle started to push up a little bit. Ended up just being like, I believe, a 5-minute or a 1-minute bear flag. No, it was a 1 minute because we're on the 5 now. Duh. But yeah, it didn't give me much, right? And then it ended up selling off under. It retested the level, and then I got out on the retest of this trade. And that was another $280 loss. So right off the bat, I mean, intraday trade on a 0DT, which was a little impulsive, $200 loss. And then I ended up losing $600 or $700 on the NVIDIA 4 contract swing. And I was like, damn, okay, that sucks. Because yesterday, if you guys remember, I made about $800 total, or 700 on NVIDIA. And I mean, I lost the entire day yesterday, and that can be detrimental because now you basically wasted an entire day of trading. Luckily, I still had Roblox and a lot of other good plays this week, but that can really ruin a lot of newer traders' mindsets. And instantly, what you're going to do, like I said, is just go find any pattern, any chart, regardless of level. You're just looking for familiarity in terms of things that you've seen before, and you're going to jump in and likely over leverage, oversize. And I was just going over that on the chart. I was like, dude, this sucks. But the reality is you have to be even more patient now. And it's okay to chip away at this. An $800 loss or just eradicating an entire day shouldn't really put a strain on you. That's the market. It's going to fluctuate. We had a lot of good trades. The market's not going to just present something to you. It needs to be planned. It needs to be prepared. And really, we got kind of lucky because I ended up seeing a really nice setting up on SPY. Let's go ahead and jump at that one because that was the trade that ended up going 330%. And then, if you saw on Twitter, guys, I mean, I was pretty pissed because I had 10 contracts of that. I was pretty confident in it. I trimmed down to 5, and then I trimmed down to 2, and then I went 1 and 1. And honestly, I should have held like one runner. Of course, naturally, you're going to think about what if I held all 10, but it wasn't realistic. I didn't think we had that much juice in the tank, and we obviously did. But those contracts, Phil was, what was it? I think it was a 2.0 Phil, or like a 210. They ended up going to 3,500 apiece. So, I mean, yeah, we're not going to play the what if game, but let's go ahead and take a look at that trade because that is what brought me back green on the day without having to over leverage, without having to do too much, right? I didn't have to hold all the way to high day. I took comfortable wins at like 4 or 50, 60%, another portion off at 90, runners at like, I think I held to like 170 or 200%, and then, yeah, then from there I cut. But yeah, let's take a look at that. All right, so for SPY here, this was a crazy chart. So if you guys look, we see the engulfing candle that obviously came from Powell in the conference that happened. I think everybody was bearish. Of course, now knowing it, this is looks obviously like a bear trap, right? I mean, what ended up happening though, and why I ended up flipping bullish and taking SPX was due to the fact that often an engulfing candle like this, you'd want to see continuation either by a gap down or a simple retest and rejection, right? And that rejection I felt would either come off of this pattern I drew here, right? I thought we'd maybe gap down just a tad. I didn't think it would be a major gap down or maybe even a flat open. But I expected, as usual, buyers to defend this gap here. Usually things aren't just going to gap and go through a, or gap down and then go through a gap. So there's a lot of gap words in that. But I'd expect them to hold here, right, and then push up, and it was really dependent on the bid and how weak this looked going back in. But a true sign of strength here would have been sellers protecting this engulfing candle, not even letting it get to the midway point, but really protecting the previous day, that low right there, right? And then obviously selling off and then getting that 2-bar continuation for a move on good volume through the gap. And I would assume, I mean, there's a weekly level in between this gap level. That's what I was looking for. Of course, now looking in hindsight, this looks like a bear trap, followed by what could potentially be a bull trap, in my opinion. But what ended up happening, right? So kind of keep that in mind, okay? That this was the level I was looking for price to sell under and then push back up and then retest, okay, for a continuation down lower. But what ended up happening was pretty crazy. So here's that line. Okay, we end up zooming into the chart here, and I ended up finding this on a 1-minute chart actually. So of course, you can kind of look at this as like maybe like a falling wedge. I wouldn't confirm that with that. I mean, it was just 1-minute candles, or I'm sorry, it was low volume on the way down, so that does align with a falling wedge. But you only had 2 touch points. It wasn't anything crazy. But really, the downtrend break is something I was looking for to confirm me holding a little bit longer, right, which was like right around there. But as we started to get to this level, you guys can see it sold down, bounced off the level, pushed down one more time, right? We had a fake break over the high, pushed up, another lower high, and this is what created that somewhat of that trend line. And then it broke under the level, right? And then we had a clean retest of it, and then it broke down again, and then another clean retest of it. But look at the sell volume here. Remember what I was saying. If you get an opportunity to close out these guys or the bulls, you want to do it on volume. And what we ended up getting was a very low volume rejection, and then the bid really didn't fall off either. The bid was actually higher than the sell candle that rejected this level. This, if you guys didn't know as well, kind of gave us that inverted hammer. It wasn't necessarily off the bottom of a downtrend, which I reiterated in the Discord. I was like, typically, I'd be more confident in this if it came off of a level, but it did not, right? But it did come off of a level that I expected a harsh rejection on to see that bearish continuation, and it was a very, very weak sell-off. And then, right after, the bid already kind of surpassed it. So this looked pretty good. So this is actually where I took my entry, was right off this like 5-minute bar, and I was willing to just kind of give it a 5-minute candle close underneath. So like I said, I think my entry was like 2.0 or 1.9 or something like that, and this ended up dragging down actually with just this small wick. I mean, it was pretty volatile, but the small wick pulled it down to 1.5, so I did go red on it by like 20-25%. But what ended up happening was a pushback above, and then you got a true break of structure on this chart. And I want to zoom into the one really quickly because this is a setup that you guys will see a lot of. This was almost a perfect market maker like buy model. But you guys can see, right? I mean, kind of pushed up, retested that level, pushed up, and this is what ended up kind of making the trade go a little bit red down here. It was so minimal. It was crazy how quickly it happened. But as this made its way back up, right, you guys will notice that it ended up breaking the structure of not only the level that we were looking for sellers to be aggressive on, but it ended up closing over the top, right, of this, like, these 2 peaks here, okay? And this is your break of structure. Sorry, I'm just going to draw a line, like, it's not snapping. There we go, open, high, low, close. So we were looking for the structure break to get based back on. You could either, take the line from here or here. Either way, this was a really clean level, and I liked it because we now had a level in play. It wasn't me just taking a bull flag in the middle of empty space and just taking it because it's a bull flag or a bear flag. It was a clean structure break. It was a clear, fault or fake breakdown or just a failed breakdown and continuation opportunity off this 434.87, and it pushed back above on, increasing volume on the 5, but I just really like the RR as well. But this gave me the clear opportunity. I did size a little bit into this position around this level here, and of course, I mean, it just took off. And from there, you're looking to target the lower highs, and really this was the initial spot here. It was right around, what, 435.6. So I ended up having this on my chart as my first target. Of course, as this pushed out, when I got this little strength candle as it broke through the downtrend line, I was aware of the downtrend line, so I did take off 5 contracts there. And then obviously I was looking for this consolidation in this 435 BOS to hold. It did hold, and then it pushed out one more time, took out the lower high, and I took another 3 contracts off. And then from there, I mean, really, you're just looking for a high day target, okay? So it was 436.24. If you guys have trading ticks, I did mention that 437 was on the cards. Did I think it would get there? Absolutely not. So, I mean, I did have a line up like right around here. Yeah, like 437. Oh, didn't do it. We're not going to be perfect with it. But I was looking for maybe a move up there. I didn't think we'd get it. And goddamn, man. Yeah, I wish I would have held like a contract or two. But pushed through that, based, and then it had one more nice little push out. I was out of my entire position probably in this little range here, right? Especially as it broke out. I thought 436.24 was it. And then I was going to look to add into my shorts again up here near that 438 level. But yeah, I mean, it kind of broke out, ended up pulling back onto the level. I wasn't really comfortable buying up here anymore. Of course, there was plenty of opportunity, but this is just the 1 minute chart. One thing I want you guys to note as well, and we were talking about this on the Discord, or I was doing it on live, was how incremental the lower lows were, right? This is typically what you see as you're breaking under a very, very key level. In this case, it was that 434.87. But you'll notice is each lower low is not, there's no space in between it, right? There's not a large distance created by it, because the real objective of it isn't necessarily to force price down and go lower. The rating stops, right? The rating stops, and a lot of retail likes to trade that way too. Is they look for a lower low break, they'll enter in, and it really, they're just accumulating people's stops and likely buying their positions down here. So if you go to the 1 minute, I mean, even from this level here, man, it was pretty weird. Like lower low is, or a low is here, right? You still have the low a day, but then you got this low, then this low, and you guys can see it's only a couple cents that it's triggering. And then you get the big rejection off. You get a lower low here, right? Obviously under the initial low, but then you guys can see it's the same exact thing. Lower low, lower low, lower low, and it's only off by 10 cents, 8 cents at the most. And then really it starts to find this little area where lower lows are no longer being made, and the floor starts to get made, and you start to get this rounding bottom, or this flat bottom that I was talking about. In this case, and this is why it's important to use your multiple time frames as well. If you zoom out to that smaller time frame or the larger time frame, you guys will see you got that inverted hammer right off the, what I expected to reject, but it was low volume. You start to get your flattening bottom, and this is something that I felt like was worth the risk. Now, I did mention, right, on live as well, if you guys are in the Discord, this isn't the best entry. You don't want to be like everybody else on FinTwit and be the guy that says, oh, I called bottom. I'm being that guy right here, but I did want to emphasize that you don't always want to be doing that. It's a losing strategy. What you do want to look for is that break of structure, and then potentially adding there. I mean, not potentially, that's your best add. And I went through the options chart as well, because I ended up having a 2.0 fill in this range, or 1.9, whatever it was. But if you think about it, right, that's a risky trade. There's no real, there's not like a definitive confirmation on this. You're just trying to time a bottom. But what ended up happening here was it ended up pushing out, and then it pulled back, and then you got your break of structure and a nice base on it with a 15-minute bar, right? We had a 5, 10, 15 here. And what ended up happening was contracts for 2.25. I would rather take and spend a little bit more, right? 2.25 versus 2. I'd rather spend the extra 25 bucks and know that I have confirmation that buyers are stepping up the bid, right? And that the low has been somewhat found here, right? And this gives you a lot better of an opportunity. On top of that, right, you can also base your risk a little bit better, okay? I mean, now, if you're just timing the bottom here, what are you going to risk? You're just going to risk a random spot down here, a random 20%. What is your risk? There's no real risk. You have to, especially considering underneath this level, you're now trading into the engulfing territory from the previous day. It's a pretty sticky spot. So once you get this higher low, the break of structure, you end up getting confirmation that we're now holding above and buyers are stepping up their bid, and no real effort to sell this down. Now you can take this low and then risk this little level here, right? That's obviously only 50 cents or so. You can actually see what it would be on the options chart in terms of risk from top to bottom. I think it would have been like 220 to 1.6. So whatever your loss threshold is, or however you trade, you could have done that. But at least you have an area you're going to lose at. And then of course, right, I did take an ad here, and then it rocketed up. Took trims into strength, of course, and then obviously I was out of the position as we broke our high, and that was my target. Unfortunately, this trade went parabolic. I did not think that it would trade all the way back up to the top of this gap. Unfortunately, I realized a little bit too late, and I will show you guys really quickly. /ES, why I did this. Right? This level, same exact spot on ES. I guess it barely just swept today, right? Look at the difference between the two. I was looking for these buys, basically what, 1, 2, 3, 4, 5, 6. The 6 days of consecutive highs. I was expecting these stops to get rated, right? And then I think it's going to trade back and restructure the chart. But look at the difference. This barely wicked over by, I don't even know, what was the top of this candle? 44.35.5, so about $5 over. Now go look at SPY. Okay, look how much bigger the difference is. This thing popped over an extra $2.50, right? What was the high of this candle? Basically $3, right? So basically 2.5. But still, did the same exact thing in terms of like where it was trading to, but one went way further over than the other. I should have been using ES as my gauge for a target, and not really taking the gas off or foot off the gas, especially for having runners. And I should have looked at all my stuff. I should have looked at SPX. I should have looked at ES. I should have looked at SPY. Be like, hey, like obviously ES takes precedence over anything else in my opinion in SPX. Even SPX was the same story. Okay, I mean, went a little bit further. There's the gap, right? A little bit further overhead, but SPX and ES had not technically rated these stops yet or filled the gap, and SPY had already done it. So something I should have noted, but this is essentially what I'm watching now. I guess I'll give you guys a little tea for that short position I have. I know a lot of you guys were asking me, am I still short? I never had a lot of contracts on it. I had 2, I don't know why, on SPY as it did this, right, as it initially hit this gap fill. I almost pussied out and I didn't take a full position there just because I felt a little bit weird about it, especially the fact that it just opened there. And I was looking for a higher or a lower high to retest that. We never got one, right? I mean, it just kind of sold off, and then Powell, I was up like 55, 60%, and I'm not going to add into that. That's crazy if you're going to do that. And I was waiting for maybe one more push up towards the top of this range. And of course, I mean, if we go look at SPY, once again, pretty far over that level, right? I mean, I feel like, if I had any more contracts, it's definitely a stop out. But we do have this like trend line resistance here. And then on top of that, if we go back to ES, I feel like I keep switching back and forth. I'm sorry. ES, in my opinion, is the tell here. So this is what I'm going to be watching. I'm going to be watching for this essentially to kind of false breakout. I might risk the bottom of this candle here since that would tie in with the gap. But this is the area I'm pretty much going to be looking short and to add into my shorts now. Especially if we get a daily close with a wick like this, very similar to SPY, kind of not SPY, very similar to, what chart was it? Kind of how NVIDIA looked. Right, NVIDIA on this day, I mean, that's really what I'm looking for. This long upper wick with a daily close like that. Of course, I mean, this I feel like was an anomaly move where it kind of pushed even further out. But that's what you're really looking for, is you're looking for these nice breakouts that a lot of people jump into on the smaller time frames. And then as price moves down, a lot of people are just holding position, guys. They don't really pay attention to the higher time frames. They don't really know what's happening. they're at work or whatever the case may be. They're just not managing it how they should. They diamond hand, quote unquote, and then the daily closes like this, and then this is where you get those aggressive gap downs, and then they would close, and then you get a ton of buyers closing out all at once, and it's a big mess. But this is essentially the kind of candle that I'm looking for, that I want to be replicated on ES, SPY, SPX, etc. Just in that range that I was talking about. So that is it, guys, for the recap. I think I'm gonna probably post this on Twitter, so the Twitter guys kind of get the game plan for this. But yeah, not really stressed about this at all. Even if it does, I think at most it'll be. I think I'm down like 30% on them after being up 50% yesterday. But like I said, only 2 contracts, so I don't really care. If it ends up doing what I want and gets the candle close, then I'll size into that position on that confirmation. But until then, this is just a speculative trade that I started. But hope you guys enjoyed. I went pretty in depth, I feel like, with a couple things here. Obviously, I was green on the day. Thank you to SPX. And then obviously on the week, because of Roblox and NVIDIA, I've just been rinsing the same levels on that. But yeah, Tesla, once again, all good traders do that. You gotta nip it in the bud when you see it. Not every trade is meant for you. Not every trade is gold. And if you start off red with a swing trade or just some kind of bad trade, just acknowledge it and maybe step away. Come back when you feel a little more refreshed. Come back when the charts actually come to a level. Don't just chase stuff because you've seen stuff in a textbook, right? And that was my fault on Tesla. NVIDIA. Man, I don't know what to say, man. Sometimes you get caught, guys. Sometimes you just get caught. NVIDIA definitely caught me. Luckily, I didn't go super heavy, 4 contracts, but I mean at 2.27 or whatever the hell I had, 2.27 down to like $70. That's not good either way. But yeah, that's gonna be all, guys. Hope you guys enjoy. I will see you on Saturday. Take care.